What a delight to have you back on ET now, Mr. Jhunjhunwala.
Thank you for calling me, and I hope all the adjectives you use are true. I hope I deserve them and I live up to them.
You know, I'm going to start with something which I picked up on my WhatsApp a couple of days ago, and it says there's a strong market rumor. I have that WhatsApp message on my phone. There's a strong market rumor that Big Bull, which is you, has informed his close circle of friends and his associates that markets have topped out and now we may see a significant correction going forward. Have you told your friends like this?
Well, Nikunj, I think such rumors are most deplorable. I can always be right and wrong. I don't know who's spreading them and for what reason. But I think we are in the midst of a bull market, and I think we are in the very early stages of it. Because bull markets cannot end. You know, what are bull markets? Bull markets have valuation froth. And bull markets have commitment froth. Right? Now, just by valuation froth, bull markets don't end. Harshad Mehta beautifully said that there is a difference between commodities and stocks. In commodities, when prices go up, demand goes down. In stocks, when prices go up, demand goes up. Right? So, bull markets don't care for valuation froths. And then there is a commitment froth. Right? Unless the two combine, a bull market top is never made, along with bad news. So, you must have a commitment froth, which I don't think we have at all. Most people have not participated. They are questioning the bull market. Right? And there is some amount of valuation froth, I would say, but very minimal. And that has to be combined with bad news. Having said that, I think we are just in the initial stages of what I think is going to be a bull market, which is going to put 2003, which will make us forget 2003 in my opinion. Also, having said that, markets have gone up from 6,800 to 8,800, 8,900 in the last 5 months. Markets could correct anytime. Right, but it's my opinion that markets, even if they correct, are going to correct more time-wise rather than price-wise. I find it, the purpose of this interview also is, I don't want investors to be misguided. I don't think we are nowhere near a top on all indicators. If you see earnings growth, returns in the last 3 years, P ratios are high because their market is anticipating earnings growth. Right, industrial capacity utilization, interest rates, right? Then any kind of commitment. So I don't think, I hate that, people should misguide investors. I don't think we are anywhere near a top. We could have a correction anytime. We've had a 30% rise in 5 months. But that doesn't mean that this bull market is going to end. And I'm not an advisor to anybody except my wife. Right, so I don't I discuss things with people. So I want to say distinctly that we are in a bull market. It's in the midst of just the starting. I think we are where we were in 2003, right? So don't get misled by such rumors.
So I'll take the clock back to 2004. We had a conversation on a different forum. I think the Sensex was 6,000 or 7,000, and you said in next 3 years Sensex could be 18, 19,000. I raised my eyebrows that time. That time on paper it looked unbelievable. So are you making a case that in next 3 to 4 years the index could actually double?
Well, I can predict the direction, not the depth. Even if I have some prediction, I won't like to make it so early, right? But I think the direction is surely upwards.
Let me draw your attention to what's going on in the world right now. Growth is a concern. There are zero interest rates. There is an outcome of US presidential election which is still unknown. Economic growth is not real, at least at global level. So don't you think that at the global level there is a lot of complacency?
I don't think there's complacency because globally, I think history is going to change. All these smart people, George Soros, Rockefeller, everybody is bearish. But the fact remains, Warren Buffett said that interest rates act like a gravity on valuations, right? Now, we have had valuations in America or in England or in Japan based on interest rates in America of 4 to 5%. Now, interest rates in America are 0.5%. Now, unless or until interest rates go up or there is some geopolitical problem or a crisis of confidence, how will the bull market break there, right? You are having 1% yield in the bank. You have negative interest rates in Europe and Japan. What is a don't you want to buy a stock with 5% yield? So I don't think, first of all, we have to recalibrate P's according to me, because these interest rates are far more permanent. Even if they go up, they're not going to those 5% levels, right? So I think we got to have some fresh thinking, right, before the markets abroad are going to correct in any significant way, I think. So whatever be people's opinion, globally growth may be slow, but in the interest rates being what they are, I don't think markets are going to correct very easily unless we have a gain in interest rates.
But why are we staring at a very disjointed world? Bond markets are pricing in almost a recession. Gold prices have gone up 20% this year. US equities are also at a record high. Is this all because of liquidity that the world has become fractured?
No, but is that it may be because of liquidity, but you got to ask yourself, is this liquidity temporary or permanent? It is temporary if interest rates are going to dramatically go up. If US interest rates go up from 0.5 to 0.75 or 1%, is the liquidity going to go away? I don't see interest rates going up below 1.5%, 2% in America. So you have to recalibrate the P's with the new interest rates.
Now, the conventional argument is that we are trading above the historical PE band, at least for benchmark indices. Do you think it's time to revisit that conventional?
But sometimes history, yeah, I think so. Sometimes history does not recur. I don't say that markets won't correct, but the new reality is that we are at low interest rates. Those interest rates are going to be low for a considerable period of time, right? And therefore the P's have to, the historical P's may not be what the markets are going to determine. Because what are the alternatives? Interest rate deposits is 1%, in Europe it's negative.
So how should Mr. Jhunjhunwala investor invest in this kind of an environment? Because valuations aren't exactly attractive. There is no other asset class which will give you superior return than equities. It looks like a bull market, but there is no participation.
Well, that's how bull markets start. They end with humongous participation, but they start with very low participation. Markets go up, people question. See, I think when markets go up and there is no manipulation in markets, and people question the market going up and it keeps going up, that's a true bull market. Right?
The ultimate bedrock for any
because you know what happens? Participation, people will say, oh, today market is very high, this, that, 5% lower they'll be buying.
The bedrock of any bull market is ultimately earnings, and markets have gone wrong in their earning estimates. But do you think now we could be in for an earnings surprise rather than an earning disappointment?
I think so, because earnings, first of all, in India the effect of low interest rates, and I think further low interest rates has to be priced in, right? Second thing is, market is anticipating a growth in earnings. Market has been wrong in the last 2 years, right? But that's not going to continue. Earnings are going to grow because you'll have better demand. See, you look at the place, look at what has happened to Asian Paints. I have no interest in Asian Paints. Wherever there is a resurgence of demand, you look at the kind of profit growth. And I think in India there is going to be a resurgence of demand with time in every sector. And we are working towards it, whether in infrastructure, and each sector has an effect on each other. You look at the tile sector, you look at, wherever there is good demand growth, the company's stocks have just shot up. And this is going to spread in all sectors in time to come. So what we think the P's are high, but what market is anticipating is it's pricing stocks with the expectation that there will be resurgence of demand, which will lead to resurgence of earnings. And let's not forget one thing, that lot of companies have become very, very, very efficient compared to by circumstances. Capacity utilization is 69% today. I think in the industrial sector in 2009, 2008 it was 85%. So when this capacity utilization goes up, the growth in earnings will be disproportionate to the growth in sales.
But
there, the markets may not go up so much when the actual earnings come around, because market is anticipating the growth in earnings.
So, if I look at the complexion of Nifty numbers, 40-45% of your Nifty 50 numbers are still global in nature, whether it is IT or pharma. That's the problem area. So the aggregate earnings may not go up because of global problems.
But that's a fact, no? That in any bull market, the large caps first underperform. And I can't believe that with time, Indian pharma and Indian IT will not perform. Every time people have question whether Indian IT will grow. I mean, every time it has grown. And if the application of software is going to go through the roof, right, then how will Indian companies, see, there has to be a period of consolidation. I think that's what's happening in the IT industry. Similarly, in pharma, I think India is going to be a world power in pharma. We have the lowest costs, we have good technology, Indian companies are gaining size. And I want to give you an example, about Hindustan Lever. In 2009, in 2002 or 2001, post 9/11, when the market made a low, Hindustan Lever was 320. When the index was 6,000 in 2004, Hindustan Lever was 150. Right? And that's, therefore, it is, a lot of people ask about Infosys, that could be correct. In the initial stages of a bull market, the large caps are going to underperform. And I don't believe that IT and pharma are not going to be growth areas for it. It could be for 6 months, 9 months, because the application of information technology is just going through the roof. I mean, today, people are bearish and Citibank is giving a $1 billion single contract to digitalize the bank. And I think the competency of Indian pharma companies is just going up by the day.
So, whatever hum and drum which we hear in the IT industry that Indian IT companies have lost their mojo, they are losing out to the new digital world, do you think this is a period of adjustment?
I think so. It's a period of consolidation and adjustment. They are still growing at 10 to 15%. And they are now acquiring international size. I mean, I think if I'm not wrong, TCS profits will be $4 billion. These kind of companies are not going to go anywhere in a hurry.
When I started my career, the definition of top 4 IT was TCS, Infosys, Wipro and HCL Tech. If I look at the definition of top 4 in IT, the definition is still same. The 1 and 2 keeps on changing.
Yeah.
So do you think one should actually only stick with large cap IT names rather than...
Well, I don't want to advise investors on what they should buy or they should not buy. But I surely feel that the correction in the software industry, stocks, is something which is going to end and ultimately the stocks are going to perform. You make your choice.
Now, pharma has some real concerns. US FDA could be more like a regulatory hurdle. I'm sure they will be able to overcome some of those hurdles. Some companies have managed to do that. But the other concern is that there is a serious erosion in pricing.
Well, the first one I can tell you that I think this FDA problem for pharma companies was more cultural. Ki the attitude was chalta hai, kuch bhi karo, you can use any methods. But now Indians are fast learners. They realize chalta hai, pharma mein chalne wala nahi hai. Right? And I think all companies are taking steps to ensure that they follow the FDA rules to the last line, the comma and the full stop. And I think we are not going to face this kind of regulatory hurdles in the pharma industry in future. Maybe, I mean, they will be there, but it will be very few, because that culture has changed. As for regards, I think people say there is erosion in pricing, but that's also going to kill competition ultimately. So there could be a period when, for a year, when there will be erosion. Erosion was always there, but I think that will die down with time. And these companies have made great performance. I have held I'm not recommending Lupin, I'm not saying, but I'm only telling you facts that I've held Lupin for 14 years. There were 2-3 year periods when Lupin gave me no return. And the market performed and I still held on. And what a return I got. I mean, it's 125 to 15,000. Right? So there are times when, stocks don't perform. Because Lupin has gone from 600 to 2,000, it's going to correct. I'm not saying you buy Lupin, I'm not recommending Lupin, I'm giving a general example.
But you are convinced the best practices Lupin is following?
Well, I don't want to comment on any individual company.
But like in IT, we've seen that how the definition of large 4 or the big 3 has not changed. Within pharma also, do you think the definition of big 3 will not change?
I think so. These companies are now too distinct from their competitors to really, for some newcomer to come and upsurge them. Because see, when these companies get large, you've got cash flows. Cash flows give you the ability to invest. And they don't get large without quality of management and opportunity. Maybe the opportunity when was such that may not be there for new companies. So I think the 1, 2, 3 4, 5 of pharma companies, although they 1, 2, 3, 4, 5 order may change.
Okay.
But the 5 companies are largely going to remain the same.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.